Hi everybody, welcome to this Wall Street News. An American semiconductor company, Analog Devices, reported its earnings on Wednesday and it expects current quarter's revenue to rise about 16% from the previous year. According to the U.S. Census Bureau and the U.S. Department of Housing and Urban Development, the number of new privately owned homes that began construction decreased 9.8% in January from a month ago. According to the Fed minutes of the FOMC meeting in January, Fed officials said that inflation remained somewhat elevated. 10-year Treasury yield is hovering around 4.52%. For the US stocks, S&P 500 rose 0.24% to a record high on Wednesday, and the Dow Jones Industrial Average added 0.16%. The US semiconductor company Analog Devices released its earnings on Wednesday before the bell. The company reported $2.42 billion of revenue for the previous quarter, down 4% from a year ago, but above expectations. Adjusted EPS was $1.63, higher than market expectations. When it comes to the guidance, the company expects current quarter's revenue to be $2.5 billion, plus or minus $100 million, up 16% year over year. Then shares of Analog Devices jumped 9.74% Wednesday. Analog Devices Chief Financial Officer Richard Puccio said during the conference call, quote, "On a sequential basis at the midpoint, we expect industrial to lead our growth and automotive to grow while communications and consumer decline. Overall, our business continues to improve off a Q2 2024 trough in what continues to be an uncertain macro environment. We saw further order improvement and a positive book-to-bill during Q1. Importantly, booking strength was driven by industrial and automotive, our two largest end markets. Given this trend and the exciting product cycles Vince described, I'm confident we will return to long-term model growth in 2025. According to the U.S. Census Bureau and the U.S. Department of Housing and Urban Development, the number of new privately owned homes that began construction decreased 9.8% from 1,515,000 in December to a seasonally adjusted annual rate of 1,366,000 in January, down 0.7% from the January 2024 rate of 1,376,000. In addition, privately owned housing units authorized by building permits increased 0.1% from the revised December rate of 1,482,000 to a seasonally adjusted annual rate of 1,483,000, down 1.7% from the January 2024 rate of 1,508,000. The Federal Reserve released the minutes of the FOMC meeting in January, saying, quote, "In their consideration of monetary policy at this meeting, participants noted that inflation remained somewhat elevated." Participants also observed that recent indicators suggested that economic activity had continued to expand at a solid pace, that the unemployment rate has stabilized at a low level, and that labor market conditions has remained solid in recent months. With the stance of policy significantly less restrictive than it had been before the committee's policy easing over its previous three meetings, all participants viewed it as appropriate to maintain the target range for the federal funds rate at 4.25% and 4.5%. Participants judged that it was appropriate to continue the process of reducing the Federal Reserve's securities holdings. 10-year Treasury yield had decreased after the PPI report was released last Thursday, as economists expect the core PCE price to rise 0.28% in January based on the CPI and the PPI numbers. Then it fell further last Friday as the US retail sales dropped 0.9% in January, far below expectations. The yield rebounded earlier this week, but it went down again as the housing starts tumbled 9.8% in January, month-over-month, and the Fed minutes came as no surprise to investors. For the US stocks, S&P 500 rose 0.24% to a record high on Wednesday, and the Dow Jones Industrial Average added 0.16%. The tech-heavy Nasdaq inched higher 0.08%. Okay, this is the end of today's news. Thank you for watching. Have a great day.